Okay, good day everyone. Trust you are doing good. So, as promised, this is the video. So I'll be sending into you that's this video and the other video talking about psychology and risk management. So this video would actually contain everything you need to know about technical analysis. So just write down what. Now, the platform I use is the TradingView platform. I tell you guys, do sign up for TradingView platform. If you want to sign up for a TradingView platform, please inbox me. I will give you the procedures. You can sign up with my link if you like. We both happy if you sign up with my link. So let me drive right into what it's very important, like very important about the market, which is market structure. So I remember I held a Zoom call for you guys, I guess a week back or a few weeks back. I held a Zoom call for you guys and I said something, and I'll tag that here over again and say caps lock with a big heading. Okay, structure is king. Okay, structure is king. Now, structure is king how? Structure is king. Now, let me tell you something. In the market, I'm diving right into it already, so I expect you to take notes. Please take fucking notes. Please take notes. Okay, so the market is very broad, but I try as much as possible to break it down. So in the market, we have something that drives the market, which is price. So all the action you see is driven by price. That's why we say we have something called price action. Now, when we say structure, there are two types of structure. We have the trending structure and the ranging structure. Please do take note. I said we have the trending structure and the ranging structure. Okay, so when I say we have the trending structure and the ranging structure, these are the two major type of structures that we have. Now, the trending structure, when we talk about a trend, it means something is just going, be it up or down, while a ranging structure, something is just moving in between a certain phase, never above or below that level. It's just moving within that phase. Now, when you understand that we have two type of structure in the market, which is the trending structure and the ranging structure. Now let's dive right into the trending structure. Very simple. The trending structure is now broken down into two parts, where we have the uptrend and the downtrend. Now, in an uptrend, we have series of higher highs and higher lows. So in an uptrend, we have series of higher highs and higher lows. So okay, let me lock this down. So I said in an uptrend we have series of higher highs and higher lows. Okay, so when I say we have series of higher highs and higher lows, when I say we have series of higher highs and higher lows, what I'm actually talking about is the way price moves. Like, price moves in a series of higher highs and higher lows. Now, how will price move? Since we said it's moving in series of higher highs and higher lows, this is how it will move. First, we have price coming in a downtrend. So let's say this is a small downtrend. Then we have this low here. When will a series of higher highs and higher lows be formed? So all of a sudden we have this big massive momentum that broke this last level. I'll still explain all of this, but just follow along. It broke this last level. Then all of a sudden we had this retest back to this area. Then price start projecting upward, creating higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. Now, this is a low. This last level here is called a low, and this is called a high. Now this current level here is called a higher low, this one is called a higher high, this is called a higher low, this is called a higher high, higher low, higher high, higher low, higher high, higher low, and what? Higher high. Now let me explain this properly. The reason why this is a low is because of it was lower than, like, this area is lower than this area, so we call this a low. And the reason this is a high is because this area was higher than this area. Now why is this a higher low? Because of when price fell back down here, it never came back to this area, so this is a higher low. Remember, this is a high, but this price movement downward was lower than this high, so we say it's a higher low. Then when we had this projection higher, we had a higher high. Why? It was higher than this previous high, and so on and so forth. So in an uptrend, I say we have series of higher highs and higher lows, higher highs and higher lows, while in a downtrend we have series of lower highs and lower lows. Now let me just quickly brush through the downtrend. Now I said in a downtrend we have copy, paste. Okay, so I said we have in a downtrend we have series of lower highs and lower lows. Okay, now knowing that in an uptrend we have series of higher highs and higher lows, in a downtrend we have series of lower highs and lower lows. This is a small uptrend. Price moved, broke down, moved, then all of a sudden we have this big impulsive move to the downside, breaks that last level, retest this level, projects downward, 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 and so on and so forth. So this is a high, this is a low, this is a lower high, this is a lower low, this is a lower high, it's a lower low, lower high, lower low, lower high, lower low. Now how do I know that this is a lower high and this is a lower low? Remember, we had a high here, then all of a sudden this last level got broken, then we had a low, then we had this small movement to the upside which was higher than this low. That's where we have this what? Lower high. It never broke this high, so it's still a lower high. Then when we had this price plunge downward, we had this what? Lower low, and so on and so forth. So I hope you do understand the concept of a trending structure. Now to a ranging structure, I'll use a box in this instance so everybody can actually grasp how a range moves or what a range really is. Okay, so let me just remove the color inside. Let me remove the color inside and background off. Okay, so a range, in a range, what we see in a range is equilibrium or equilibrium, whatever you guys call it, equilibrium or equilibrium within the buyers and the sellers. There is a what are they calling it? There is a agreement between them that price will never go beyond these two price value. Like price will never go beyond it until one of them disagrees and we have a breakout. It leads to the upside or to the downside. Now in a range bound, we don't have series of higher highs and higher lows. We just have series of highs and series of low. Remember, all these, they are equal highs. None was greater than none, and all these are lows. None were greater than none. So that's the difference between a ranging structure and a trending structure. So you see, there is no difference at all. I mean, there is a huge difference between a ranging structure and a trending structure. So you can see that there is a huge difference between a trending structure, an uptrend and a downtrend, while a ranging structure. Now, in a trending structure, two things are very, very important for everybody to know. So let me just delete everything on this chart, like delete everything I've put on this chart so you all can. Wow. Okay. A bit I'll be done with the whole taking everything out. Okay, so okay, now I said in a trending structure there is something that is very important for you to understand. It is called impulse and correction. Now let me type that out. Impulse and correction. Now please do take notes, please. It's very important. So this is for a trending structure. We have an impulse and a correction. So the question that pops up in your head is, what is an impulse, right? Now an impulse is like a massive move. Let me explain with a typical situation. Let's take for instance, we want to run a race. Immediately we hear the gunshot or the whistle, everybody runs fast, right? That point whereby everybody runs fast is called an impulse. Remember, we can't run fast like that throughout the whole race, right? So a point will come, some people will be weak, they will slow down, and after they slow down for a while, they will pick up that same momentum and speed again. Now the point whereby they start up very fast is called the impulse, while the point whereby they slow down a little bit to rest is called the correction. So in the market, that's the same thing, or the same way the market moves. The market will move impulsively, then correctively, impulsively, then correctively, impulsively, then correctively. Same applies to a downtrend. Impulsively, then correctively, impulsively, correctively, impulsively, correctively. So this is just the simple concept behind market structure. It is that impulse and correction that creates that trend for us, that series of higher highs and higher lows in an uptrend, that series of lower highs and lower lows in the downtrend. So impulse and correction is for a trending structure, a trending market structure, whereby that is how the market move, the way the market move, that is it. So I hope the whole concept behind market structure and everything is clear, because I did well to actually break it down for a 6-year-old to understand. Now with that being said, we understand that we have two types of structure, which is the trending structure and the ranging structure, whereby the trending structure consists of an uptrend and a downtrend, whereby in an uptrend there is series of higher highs and higher low, in a downtrend there is series of lower highs and lower low. Why in the ranging structure is just the agreement between the buyers and the sellers between a price, like they agree at a price. Oh, you chop 10, make I chop 10, those type of levels, whereby they both agree at the price until one of them says 10 is too small for me, I want to take 20 now. That is when you see a breakout happen, whereby they both the range bound which price was trading in between breaks out, and you see that it moves to the upside or to the downside. And like I said, the impulse is what creates that trending structure for us, whereby we run fast, price move massively to the up or downside, then when we correct, we slow down, price moves against the trend, that means in the opposite direction of the trend you are in. So I hope that is well structured and clear enough. Now let me give you guys a typical these are just diagrammatic examples. I've not gone to like the real chart example. We'll still go there and we'll still talk about it because it's very important. Let me still give diagrammatic examples over and over and over again. So when I say market structure is king, I'm not lying, because of, even if you are in an uptrend cannot last forever. It can last for 50 years. But when the structure wants to change to an opposite trend, how will you know? Will you just continue assuming this is an uptrend, this is a downtrend, and so on and so forth? No. This is whereby you see the trending structure and the ranging structure comes hand in hand. So let me explain. I'll be using a scenario of where a downtrend will change to an uptrend first, before I use the scenario of where an uptrend will change to a downtrend secondly. Now this is a regular downtrend, series of lower highs and lower lows, 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 lower highs and lower low. Then all of a sudden you see price creates that last low and can't break out or move again. Then you see some sort of a range. Price consolidates for quite a long period of time, like can consolidate for 2 weeks, 3 weeks, a month, whereby people will be weak and they won't even know where price is heading to. It will just be hitting stop losses. People that are trying to trade the range and all, then all of a sudden you just see there's a massive move which just breaks out of this area of structure like this. Then it retests back to the neckline of that range band and price continues to project higher. Then structure has changed from a downtrend to an uptrend, from a downtrend to an uptrend. Series of higher highs and higher lows, series of higher highs and higher lows. Now with this diagrammatic example, I hope the concept of how market structure changes from a bearish structure to a bullish structure. Like I said, I'll still explain once again. You're starting a race here, you run fast, then all of a sudden you slow down, you rest, you went back up to rest, and all of a sudden that energy came back, you still pushed back down lower fast and you corrected a little bit, and so on and so forth, till they will now come to a point you can't even run back down anymore. You just want to start running. That's where you just run in zigzags till you just all of a sudden just run to the upside and break that range you are in, then start projecting upward. So now let me tell you guys something. Market structure works perfectly or fine on higher time frame, but market structure is on all time frames. I hope that makes sense. There's market structure on the 1 minute time frame, 5 minute time frame, any type of time frame, but the best time frames whereby it is good to apply the concept of market structure is the higher time frame. Higher time frames like the 4-hour, daily, weekly, and monthly. Any other time frame below that, I don't apply market structure. I don't consider those things as structure because of they are weak. Only on these higher time frames are structure strong and can hold for a long period. Now let me explain something to you guys. Every correction doesn't just happen like this. Every correction, you don't just rest and go back up. Some corrections are just linear corrections, like straight, and they'll still plunge down for like some correction can be this way and it's still break out downward and all. So possibly when we guys are done with the 2 videos, we'll do a Zoom call and I will talk in depth about it. So this is how structure changes from a bearish structure downtrend to an uptrend. So we have this bearish momentum, series of lower highs and lower low, lower highs and lower low, lower highs and lower low, till it comes to a point it can't move lower anymore. Like something is stalling price here, it can't move, and all of a sudden there was agreement between the buyer and the seller, chop 50, make I chop 50, chop 50, and all of a sudden the buyers say they don't want to chop 50 any longer, 50 is too small for them, and all of a sudden they move price higher, retest the neckline of that range bound they broke, and start projecting to the upside. So that is how structure changes from a bearish structure to a bullish structure. Now let me use this as a continued example. Now we see we have an uptrend here. So the same way the uptrend continues and all of a sudden price couldn't move higher, price stalls at this area of structure, price stalls. The buyers and the sellers, they are chopping 50, chopping 50. All of a sudden the sellers said 50 is too small, let's chop 200, and all of a sudden you see this big move to the downside. Gas retest of that neckline and price start projecting to the downside, creating series of lower highs and lower low, lower highs and lower low, lower highs and lower low, lower highs and lower low. So you see the same way in a downtrend to an uptrend is the same thing that applies to a uptrend to a downtrend. So you see it's the same thing. It's just like a cycle. They call something the market cycle. It moves in cycles, like the market moves in cycles. So that's just it on market structure and all. It's very very easy to understand. Now before I go I would like to I would still love to show the examples I said I would show on a real chart, to be precise. Now I want to say something actually. What was that? If you are on the hub like Telegram channel, if you notice most of the analysis dropped, look closely at it, you would see that all these concepts I explained are what is there. So I gave you guys a PDF for market structure and chart patterns. So I'm talking about chart patterns also before I go on this video, but let me show you guys market structure. Okay, so I won't be using the 1 hour time frame. Let's go to the daily time frame. Wow, my internet connection is shitty. Okay, not too shitty. I did a few adjustments on my chart, so it might load slowly. Okay. Found a bearish market structure. Now look at this, look at just this beauty right here. Let me pick up a box to show that this is a range bound. Remember I said market, when it wants to change direction, it will range for a while. That means agreement between the buyer and seller. See, the sellers chop 50, the buyers chop 50, sellers chop 50, buyers chop 50, sellers chop 50, and all of a sudden the buyers say they can't chop 50 anymore. They took price way up. Now looking at this, like you see, market structure is everywhere on this chart. Like just looking closely, see this right here, range bound. Okay, let's take it from this top here. So we had a bearish structure here, the same way I explained on the chart. We had a bearish structure, we had a low, then a lower high, lower low, lower high. Look at it, when the lower high happened, it came back to the previous area of structure. It didn't pass the previous area of structure. Why? Like I said, market respects structure. It will never go above. If it goes above it, it means structure has changed. So we had this low, then this lower high, lower low, lower high, lower low, all of a sudden lower high, back to this previous area of structure right here. Back to this previous area of structure right here. See, and we had this what, lower low. All of a sudden we had this small range band, sellers chop 50, buyers chop 50, sellers chop 50. All of a sudden we had this big move to the upside, creating a massive momentum candle. We had this what, low, and this is a high. This is what, a higher low, a higher high, a higher low, a higher high. All of a sudden the buyers and sellers, they start chopping 50 again, and look closely, range bound. All of a sudden we had this high, low, lower high, lower low, lower high, boom. They start the same thing over and over and over and over again, over and over. The same thing happens in the market. The same thing. Look at this downtrend, series of higher, low highs and lower low. Everything is here. All of a sudden structure changed. I said price will stall at a point for quite a while, and boom, it reverses, creates an uptrend. So you see, let's go to another currency pair. Most of my charts are marked out, like all my charts are marked out, but I'll clear them if there is need to. You can see structure is everywhere. Wow, this is one beauty right here. Okay, see this is structure. Like this is a downtrend, low high, low, lower high, lower low, lower high. Look left to get right. See, it's previous area of structure right here. It went down, retraced up a little, couldn't get back to structure, fell back down. All of a sudden structure changed at this level, tested this last level, and let's go to the 4 hour time frame. There is something more amazing on the 4 hour time frame. Okay, it's much clearer on the 4 hour time frame. So like I said, I want to explain how structure changes. Let me zoom out my chart. Wow, it's too small. I hope you guys can actually see this. Okay, let me go full screen. Okay, full screen. Let's zoom out a little. Okay, now look at this. If I zoom into this properly, which I would, I want everybody to look closely, look closely at what price and structure is saying. Look at this. We had this small uptrend, or this uptrend. Now we ran real quick to the upside, we rested. Look at this rest. We ran, then we rested. Like, wow, my magnet is turned on. Okay, escape. Let me turn off that my time. Let's go full screen. Okay, so I said we ran impulsively to the upside, then we corrected impulsively, then we corrected back to this area of structure, and all of a sudden we couldn't go anything any further. We had this lower high here, and we just ran impulsively like crazy to the downside. We rested a bit, we ran all the way back down here, we came back up to rest a bit, corrected to the upside, we ran, we went back up, we ran all the way down here, and all of a sudden this is the last area of structure. We just dipped like crazy down and we ran back up, took out this area of structure, took a rest, ran again, took a rest, ran again, took a rest, and so on. You see, structure is everywhere. So what I want you guys to do is, like, after you watch this video, just go on your chat, like, go on your chat, start looking for these things, start dropping it on the group chat, start letting me know that you understand what I taught you. Like, structure is everywhere, structure is everywhere in the market. Just open your eyes, you will see it. Like, structure, impulsive move to the upside, correction, move, correction, move, correction, move, correction, move, correction, move. It's everywhere on the chart. See, price range for a while, structure change, came for a retest, went down, retest, down, and all of that. So you see, this is something that is on your chart always, on your chart always. So with market structure being known, and I'm sure it is understood, let me talk about the chart patterns. Now, I already did a class on candlestick patterns for you guys, so I'm talking about chart patterns right now. And chart patterns, I'm talking about the key chart patterns. I think it's very crucial for you guys to know. I won't be talking about all the chart patterns. I'm talking about the ones I feel are very, very, very important. So let's start with the first one, which is the head and shoulder pattern. Now, please don't mind my drawing. Don't mind my drawing. So this is a head and shoulders pattern. We have two types of head and shoulder pattern. We have the normal head and shoulder pattern, which is this one, and we have the inverted head and shoulder pattern. That means the upside down head and shoulders pattern right here. So what is the rule behind the head and shoulder pattern? The rule behind the head and shoulder pattern is it's mostly a reversal chart pattern, whereby when price moves higher, like when price moves, creates a high, creates a higher low, creates a higher high, and all of a sudden comes down back to this low, creates an equal low. Yeah, wow. Okay, price moves, creates a higher high, down here. No, don't worry about this. Let me use, they have the chart pattern here. Yes, I knew they have it. Okay, so price moves, creates a high, comes down, creates an equal low, then creates a head, so you see, this is how a head and shoulder looks like, but this is a picture perfect head and shoulder. Please and please and please, you won't see most head and shoulders like this on your chart. You won't see most head and shoulders like this. It only in rare scenarios you see picture perfect head and shoulders. Not all chart patterns are picture perfect. You have to train your eyes to understand how this babies form on the chart. So now let's go back to this. This is the inverted head and shoulder pattern. So what is the concept behind the head and shoulder pattern? It is a reversal type of chart pattern, whereby when a normal head and shoulder chart pattern form, price will break down back to the low side. So this is what you get when a normal head and shoulder pattern forms. I'm sure it's in those books I gave you guys. I gave you guys a book about it. So you have a retest back to the neckline, then price projects downward. Same applies to an inverted head and shoulder pattern. So all this, I'm just using it to, for clarity. It's in those books I give you guys. Now to the next type of chart pattern, which is the double top. This is a high, price comes down, creates another high, then all of a sudden price breaks, retests, and falls back down. So this is a double top we have two top, first top here and the second top right here. So we have two top, they call it a double top. Then we have a double bottom chart pattern. Most of these chart patterns are reversal chart patterns, and they also serve as continuation depending on where you find them in a trend. So I don't want to stress on chart patterns, like I don't stress on them too much. It's in the book I give out, so please do read up the book and try as much as possible to understand it. So I'll be coming to the end of this video right here. I hope you do understand what market structure is, because market structure is very key and crucial in the market. It's like the most very important thing, and I did chip in some other nuggets that you're supposed to know, which is impulse and correction. Impulse is also called momentum sometime, and correction is called retracement. Most times correction is also called weak momentum and all of that. So please do well to go through this video over and over again, and also please read those books I give out. Thank you. So I'll catch you guys in the next video, which is the what's that video called again? Okay, the trading psychology and risk management video. Thank you.